Hello everybody, hope they are good. What a move for Bitcoin, eh? Wow, I mean, it's a 12% pump in just 24 hours. It's amazing. Usually these moves take 2 or 3 days to happen, but that's the importance of momentum, guys, okay? Yesterday in both Twitter and also in the Telegram channel, in different moments of the day, I was telling you to not short because the momentum was very strong. You need to wait for momentum to sift out, and that usually takes a few hours, all right? Now, yesterday's projection was to favor higher prices, same as on Sunday with the Bitcoin Sunday update on Twitter, and in yesterday's video on Monday evening, I was telling you that I was going to favor higher prices, time to favor longs, for the simple reason that when you are inside a range and you see a sweep of the lows like this, you have a very clear support here that has been tested and didn't sweep the lows. Then if price comes back again to that level, the most likely thing is that it sweeps the lows. They call those stop losses from traders that are opening longs from this area and that they are placing their stop losses right below this support. Take those stop losses and then move to the upside towards the range highs. So we also have here this weekend false move to the upside that created a CME gap, remember? And yesterday we had the retest of the imbalance. The imbalance has been filled, and then that's when price could go up. And that's when I told you that I was going to look for longs. Now I couldn't enter in this long because what I was looking is this candle to close above the 50 MA, which it did, but then a retest. And if you notice, the momentum started to kick in right at the start of the New York session. Go to the 1 hour time frame, you're going to see here at 2 p.m. momentum comes in and boom, it keeps going up without any retrace. So I couldn't enter here at this stage. That obviously I wouldn't have closed it here. I would have closed my trade. I told you yesterday, if I enter there, my take profits was going to be at 53,000 for the simple reason that at that level is when we would see a rejection. Let me remove all of this now. Now in yesterday's video, I was also talking about the scenario to the upside, which would be basically to see some consolidation above this high here. All right, so if you see some consolidation around this level, then you could favor higher prices. And if you notice, that's the consolidation, okay? Consolidation, if you also notice, these are higher lows all the time. So what will you short there? That's what I told you also yesterday in Twitter, guys. Okay, all the liquidations to the upside has been hit, but there is not a sign of momentum shifting because the momentum was very strong. You can see it with all those candles. So what will you short there? Just because price is going up, you don't need to short, okay? So that's the first time that it would be a mistake to short, that I try to warn some of you. And then also, if you go back to the 1 hour time frame, in the next pump, so in this area here, I also told you to not short again. This time was in the Telegram channel for the simple reason that you had this wick here. And when there is a wick to the upside, it's telling you the price is very likely to go back to it. How long can it take? Well, it can be in the next candle or it can be in the next day. But having that wick up there is telling you the price is going to go back there, and it's very likely that it does it straight away. In most cases, it does go back to the wick straight away. So why would you short that? Go back to the 15 minutes time frame. That's the area, okay? Boom. Fills the wick and continuation. No reason to short that. Now, what do you see here? Well, I see another wick. Do you see that? That's a wick. Go back to the 4 hour time frame. What do you see? I see the same wick there. 2 weeks, okay? In the 4 hours time frame and the 15 minutes time frame. Why would you short that? You know price is very likely to come back to this level. Alright? So what will you be taking shorts here? Again, you have the same structure, higher lows all the time. Same as back there. Same as here. What will you short? It's an uptrend, okay? There is a lot of momentum and you can't short against momentum. So I can tell you this because I've been here before in the past. So I don't make these mistakes anymore, but I used to make them, and I'm sure that some of you watching this video have made this mistake. And it's not nice to lose money, but if you use your losses to learn, then it kind of levels out, okay? So try to learn from that. Don't short momentum. You have to be very, very selective. If you want to enter a short, you have to enter it when momentum is shifting, and there is no sign yet the momentum is shifting. Alright? Because look at this. Higher lows and consolidation above the key level, the previous high, that means higher. Then you have a wick, that means higher. And then you have another wick, that means higher. Okay, and now what? Well, what will you short now? It's true that there is no wick to the upside, but price keeps making higher lows, and there is no any sign that momentum is shifting out. Do you see any sign? Because I don't. Okay, go back to the 1 hour time frame. Sorry, 1 hour time frame. I don't see any sign that momentum is shifting out. So why would I enter a short? Don't try to enter shorts when there is an uptrend. Instead, it's better if you can trade the imbalances to the upside, such as those wicks. And this applies to day traders, to scalpers, and to swing traders, okay? Because in the 15 minutes time frame, you have this wick, you also have that wick. In the 1 hour time frame, you have this wick here, okay? In the 4 hours time frame, you also have, let me remove that, you also have this wick here. So if there is an uptrend, you should try to trade the trend, okay? Trade the imbalances that are left behind to the upside, all right? Now, do I see any imbalance to the upside? Not really, because it's true that we have this wick here, okay? That's the wick. It got filled. The wick went beyond it, quite far beyond it, which means that this wick here is valid for the wick fill strategy. That wick has just been filled, so right now there are no wicks to the upside that could get filled, okay? For now, you can only do two things. You can gamble, and you can go short or long, or you can wait for a new imbalance to be created to the upside. Imagine now, right at the start of the New York session, we see a massive pump up there, but then a retrace that creates a wick, say for example in the 15 minutes time frame, 1 hour time frame, 4 hours time frame. Trade towards that wick, because you can see how that's been paying out in the last 24 hours. We've had a few wicks that got filled. So if we see a wick right at the start of the New York session, trade towards it in the New York session. And if you start to see signs of momentum shifting out, and with that I mean that I want to see another range here with wicks to the upside, but price not progressing any further. And it's true that it's very likely that you don't see this in the 15 minutes time frame. You are probably, if you get to see that, you're gonna see that in the 1 hour time frame or in the 4 hours time frame. So take this level here, and now if in the next, say, 6-7 hours you start to see wicks to the upside here, but price cannot break above this zone, then perhaps Asia can start to drop. All right, that would be the sign of momentum shifting for me. Until I don't see wicks to the upside, but price not progressing any further, I'm not going into shorts. Okay, and again, you can apply that to the 1 hour time frame or to the 4 hours time frame if you want to be even more careful. In my case, I prefer in this case to keep an eye on the 1 hour time frame, because if I start to see this kind of behavior during the New York session, then at this point here, that's the Asian session, I can enter a small short, okay? If price starts to break below these levels, then I can add to my short, okay, and ride the way down towards, for example, the 1 hour 50 MA, all right? You have to be very selective in this type of volatile environments, and I don't want this to sound like, I don't know, I'm telling you off or something. Of course not, you know. I'm not about to tell you off, and the most likely thing is that you're going to learn by yourself how to avoid these mistakes, because if you make them, then you should think about them, and that'll help you to avoid them in the future. That was my case. But if you are starting and this is the first time or a few times you've made a mistake and you don't really understand what has gone wrong, then perhaps what I've been telling you can help, okay? Don't trade against momentum. You need to wait for momentum to shift out. And the most clear sign are wicks to the upside, but price not progressing any further, okay? The same applies to the downside. Wicks to the downside, but price not progressing any further. Look, are we in the 4 hours time frame? No, let's go to the 4 hours time frame. Check this out, okay? This is what I mean in this area. Wicks to the upside, price cannot break through that area. That means that the market maker is building shorts because momentum is shifting. You have this huge red candle that you can trade, okay? That is the scalp that you can take for a reversal. But you see this sign? That is what you want to see. That's what you want to see. And also, especially if it's at a key level. This was, for example, at 50,000. So what are our key level right now? Go to the 1 hour time frame. Well, 57,000 is a round number, because if you take this number here, That's 57,073, pretty much 57,000. So seeing wicks in this area, but price not being able to break through, that means that Asia could pull that red candle and that can be your short. Otherwise, don't be looking for shorts. Right now, I'm not in a position. I'm waiting to see what New York does. If New York pushes price up, we see a long wick, then I'm gonna trade towards that wick in a long, okay? It's pretty simple. Try to be selective with your trades, guys. And in terms of high time frame, it's pretty much what we've been saying, okay? You got two resistances here. You have one at 52,000 and the next one is at 60,000. If you notice in this area here between 52,000 and 60,000, there is no any clear resistance. So if price managed to break above this level, 52,000, then it's very likely to see a $1,000 pump all the way to 60,000 because there is no any resistance on the way. All right. So can we say that Bitcoin is going to go to 60,000? It's very likely because if you notice, we broke that resistance very clearly. Price is on its way, right? So Bitcoin to 60,000. Yes, even if we start to see those wicks to the upside in the 1 hour time frame and we can manage to take a short, take that as a scalp because then price is very likely to continue higher to 60,000. Okay, so don't try to open swing shorts at this level because having the high time frame telling you the weekly time frame that 60,000 is very likely, any short that you are looking to trade, it has to be very selective and it has to be scalps. Okay, close them maximum within 24 hours. That's what I recommend you guys because 60,000 seems like it's going to be the next target. All right, be very selective if you are looking to short, and if you are looking to long, just look for wicks. It's as simple as that. Wait for a wick to the upside, especially if it can be done in the New York session, because then it's very likely that it fills it straight away in the same session, and that's how you can take opportunism from this type of market. High value capital liquidation levels. Let's have a look. First of all, the delta, $25 billion worth of long liquidations. Of course, take this number with a pinch of salt because it's not real. Only use it as a reference. I'm using the max liquidity setting. But usually when we are between 25 and $30 billion worth of long or short liquidations, that's when we must pay attention to reversal signs. Okay, so keep an eye on for that shift of momentum, because if you see in the chart, then you can use this as a confluence to tell you that it's likely to see a longer squeeze. All right, so keep an eye for reversal signs, but be still very selective because if you check the spikes at the right of this chart, you can still see some spikes to the upside that are very big. Okay, 57,770 and 59,000. So if this continues increasing, say $35 billion, while price continues going higher to 59,000, then that is basically telling you very likely that there is a retrace at 60k, well, between 59 and 60k, because at 59 you have all these liquidations, at 60k you have that high time frame resistance that we saw a few rejections in the past, and you're also going to have the delta liquidations very, very high. So a long squeeze would be necessary at that point. Okay, now if on the other hand, today we start to see some consolidation, while in the 1 hour time frame we start to see wicks to the upside, the price not progressing any further, then we can go to the idea in today's session that momentum is shifting in the market, and the market maker might be preparing some shorts, a little retrace, a little long squeeze to liquidate all the late long positions. All right, so these are the kind of signs that I'm going to be paying attention to today. Right now, I repeat, I'm not in a position. I'm only going to be watching the New York session. That's all I want to watch. Okay, if they push straight away to 59, 60k, and this continues rising to $35 billion, the delta, then very likely the price is going to have a long squeeze. Long squeeze is the opposite of a short squeeze. Long squeeze is when there are many traders positioned in longs, so market is going to try to squeeze them down with a retrace to the downside to stop all those long positions. Okay, so that would be to me the sign. Pump to 59, 60k, while the delta goes to $35 billion. That's a sign to me of a retrace. And in the other hand, if we see today New York consolidating at 57,000 wicks to the upside, price not progressing any further, then keep an eye for the Asian session because we might see a little retrace, okay? That's pretty much everything. And of course, if New York sets a wick to the upside, then trade it, long towards it, because all the wicks are getting filled, because momentum so far hasn't been stopping, okay? It could start to stop now and to shift now, but so far, momentum is still very strong. And of course, if we see a wick to the upside in the New York session, then long towards it, okay? Trade it, because as I've been showing you, momentum so far is not showing any signs of stopping and shifting, and all the wicks have been filled, all the wicks to the upside. So those are the type of setups that you can trade in high volatile moments. They are going to be high probability trades, and you're not going to incur in too much risk. So that's pretty much everything that I want to say, guys. Of course, liquidation heat map very quickly, but I've already have a look at this, and there is nothing really new, okay? Take this area, nothing really, okay? We took in all those liquidations there. Some liquidations form 57,000, we also took them. Some are starting to form between 60,000 and 62,000. So far this area, it's not very bright because there are not many liquidations up there. But I could already start to tell you that some traders are starting to jump into shorts again, because when price goes up, some traders feel the need to also go short. So keep an eye on that, because it may be similar to what we've seen here, okay? For now, that's it. Just watch the New York session. I'm gonna post today some updates on Twitter and in the Telegram channel through the evening. So if I take a trade in the Asian session or in the New York session with a wick, I'll let you know, okay? So that's pretty much everything, guys. Thank you so much for watching, and I'll see you soon.